Good morning, guys. Today we've got Quinten Alison here from Investec. He's the commodity trader. And today we're just going to spend a few minutes talking about commodities and what he's seeing from his side. Good morning, Quinten.
Morning, Andre. Morning, everyone.
Just a quick one. We've seen the past couple of days, gold's been very volatile. I think we dropped down to below $1,800 per ounce. We're back at 1850. Is there something else besides the normal risk on risk off scenario that you've seen in gold these days?
Yeah, Andre, so gold's a little bit of a tricky one. I think the market got a little bit ahead of itself in terms of its bullish expectations. The market was hell of a long in recent weeks. And obviously loving the news, obviously watching with the new president in the US, Biden, coming in. It looks like that $1.9 trillion stimulus package is obviously going to become a reality. But what we are seeing on a longer term basis, so in the short term, I think we will continue to fluctuate. Personally, I'm not in the camp that we're going substantially above $2,000. I think we're starting to enter a bearish market in gold. And the reason for that being is that we're seeing the current stimulus in the US market, but what we're also seeing is an economy that is seriously starting to show signs of overheating. I'm starting to see that inflation pick up in the US market, higher interest rates coming down the line, which should put pressure on gold prices going forward. My personal view here, if I were in a mining sector, from a client perspective, these are opportune levels to potentially look at adding some dollar-based forward hedging. Obviously not doing the rand component of it, but simply doing dollars, locking in gold prices right now at near all-time highs. Yeah.
Oh, thanks. And just on the platinum side, I've seen in the last couple of days, platinum also took a hammering last week Friday, but it's bounced back magnificently well. Is there other drivers than who normally speak about catalytic converters and stuff like that? Are there any other drivers you think in the platinum market at the moment?
Yeah, so on the platinum side, it's a similar story. So we're seeing a huge amount of stimulus in the economy, which has obviously been supportive of platinum. You've got a hell of a lot of mining coming out of South Africa. I mean, everybody now is it seems to be profitable. Even mines that were traditionally marginal, loss-making mines, we're just seeing the entire sector is actually lucrative and cash generative at this point. So what we're seeing is an increased sort of supply coming to the market, which obviously and obviously the political situation here, the COVID situation seems to be easing a little bit. I don't know if it might be a little bit premature to say that, but COVID numbers in South Africa do seem to have peaked for that second wave. So we're seeing less impact on the supply side, which obviously does put pressure on platinum prices. We do see these dips. But it's actually a very, very similar story. The auto catalytic demand is projected to increase over time. As the world economy starts to come through this, and platinum, is a funny one because it's it's the metal that's currently in oversupply, in contrast to rhodium and to palladium. So it's also going to be a muddle through sort of market. I think we're range bound. I don't see any massive increases in platinum prices, but I similarly don't see any huge dips in prices going forward. The market does feel pretty stable at this point in time in terms of the PGM sector.
So yeah, thirdly and finally, Quinten, just from your side, what do you think is sort of interesting in the market? We see all the commodities at higher levels than expected. What do you think is going to happen in the next couple of months? If you have a crystal ball, what do you think is a good metal to buy, or where are we at the tops now at the moment?
Yeah, Andre. So in the metal side, I think my broad feeling is that if I take a sort of overview of the total sector, I think we're massively overpriced. I think if you look at where aggregate demand is for vehicles, I think at this point in time, PGM prices don't correlate with that. I think prices should be substantially lower. I think if you're looking at, platinum, for instance, I think we're probably a little bit elevated at current points. The palladium market is also starting to show signs that supply is coming back. So we're starting to see a market that's not in as much of a deficit. So my trade for the year would probably be to go short palladium at this point in time. I think and probably favoring it, not taking an outright position on palladium, but probably favoring it with a long position in Platts, short position in palladium. I think that spread and substitution effects between those two metals is going to start to become sort of more routine going forward. I think guys have had enough time to implement the CapEx changes to do that. So I think that spread between platinum and palladium will converge over this year.
Fantastic. Thank you for your time, Quinten.
All right, Andre. Thank you,
Have a good
everyone.
day.
Take care,
Cheers.
guys. Ciao, ciao.
Bye.